Hello, can everyone hear me fine?
Yes.
Loud and clear. Can you see my screen? Can you see my screen okay? Do you see it? Yeah. Okay. Then your name is? Sir? Yeah. Oh, hey, Frank. Look like you. You're just fine. I didn't see you signed up. See, you went to 9 incognito there. I'm in New York right now, and I wasn't sure if I could get so. Oh, I'm glad you're with us today. Thank you for joining. Appreciate that. We got like 15 people signed up. So I'll just give a couple minutes here. What's going on in New York?
Vacation.
Ah, nice. Yeah, that's where you're from, or?
Yeah, upstate New York. And I say party readies.
Oh, nice. Okay. They're giant.
And military took me away.
Oh, nice. Great. Yeah, I was in Navy for a while. I was in Great Lakes. That's good time.
11 years Air Force for me.
Oh, nice. Yeah, if I didn't join the Navy, that was my second one, and that's what I was going to go to. Oh, Nathan, how you doing? You bring it. Well, okay. Thanks for joining. Yeah, we'll be at GR after this if you want to join us. Cool. Yeah, well, new paid courts, so we'll have to see if that's that. Just recently, because I drove by Friday, there was nothing going on, and then today I just drove on the way here. So yeah, we got the courts up and ready. So
Where's that going on the way?
yeah, there was people there, so looked like fun. Looked like people were having a good time. For right. They said that every day since Wednesday, and I played a couple of times.
Jury's pulled a long way. I think it'll hold on.
Yeah, it has the element of fun to the next, so we'll be just fine. Hello, Nita, how you doing?
Oh, I'm chopping me.
Oh, hey, Joan, how you doing? I didn't see you.
Hi, how are you?
Good. Glad to see you. All right, we're about halfway there. We got half the participants, so we'll give it another minute or two, and then we'll start rolling on this.
Percent drivers farm still. I am the boss. It's type line for house half time to be.
Hello, Mary, how are you doing?
I'm sure. It gotta work. I thought, and it takes me a while to do. I did there.
Yeah, I hear you.
I you and it. So you cited pie intersect. That's why I how's that? I don't want any fighting dice.
Oh, yeah, no problem. Yeah, I appreciate that. You can do it as you wish, though. We'll just be busy, going through this week's program.
I was wondering Friday before we get forward, really, it's just you get feel that Thursday was ornamented. That's fine. The grocery store time for
Of stocks. Yeah, so the big ones, are obviously Whole Foods. Whole Foods is owned by Amazon. You have...
You're rating that right. You're not roasting with a bad brand.
Oh, I don't know who that is. Let me see. Yeah, and they all 80. Okay, there we go. Can you hear me now?
Yes, okay.
Okay, great. Yeah, so you have Whole Foods. They're owned by Amazon, so you buy Amazon, and they're getting the benefit of Whole Foods. Fry's is owned by Kroger here locally. So basically, Kroger, I wouldn't advise with them. Grocery stores are tricky right now because you just have a lot of competition. A lot of people are ordering online direct. So therefore, I'm just not a big fan of grocery stores at this time. Does that make sense?
Yes.
Okay. Yeah, and Whole Foods is probably one of the better ones just because they have things figured out. They're ahead of the game as far as getting items to you quickly. Amazon's been doing this very well since pretty much inception. They figured out things that other companies cannot. They just have the worldwide presence and the global dominance. It's really hard for other companies to keep up, such as Kroger. But great question. I'm happy to field questions as we go along. Okay, we're 5 minutes into it. I'm just going to get rolling here. The people join in, that's fine. We'll just submit them as they come up. Week 14, Stocks Explained to the Beginner. Using a pre-stock screener on Finbits, FINBIZ.com. My website, makestocksfun.com. If you want a transcript of today's seminar, I will have this as a blog on my website, makestocksfun.com. I appreciate everyone being here and spending time on your stock development. I know you want to learn how to generate wealth via the stock market. My name is Bryan Reich. I'm a successful stock investor. My goal is to be a stock millionaire. In these sessions, I want to pass on my knowledge of wins and losses so you can enjoy the success I have today. Last week, we talked about stock terminology, so hopefully you understand a little bit more about the basics. The short recap: patience is key. Waiting until the company wants to invest in gets the target price. This could take years. I literally waited 8 years for a market crash, and that happened during the pandemic, and at that time, I was all in. So therefore, patience. It takes a while to develop that as your skill set, but it's very essential for stock success. This week, we'll look at the best way to make wealth fast. By using a stock screener, we can buy great companies at great discounts. Before you begin, always ask yourself, how are these companies going to impact human life? Will this be a necessity for daily survival? Is it a must? If you go back down to the 1980s, where computers were in play, you couldn't get a new job and not have a computer on your desk. It wasn't an option that you could select. No, I rather just have my pencil and pad. You're pretty much forced into having a computer. And that when the internet came about in 1995, to stay ahead of this technology, you almost, again, kind of have to be forced into the internet. You don't want to get behind times. And these are the situations that I like to look at, is when something becomes a must. So if there's anything that you want to chime in about, but if you can predict, the next big thing, you're 20 steps ahead of the game. So what are the next big things that we're going to be facing? Internet of Things. I'm sure you heard about this. This is where the refrigerator knows that you're out of eggs. And, it'll buzz your smartphone. It'll alert you that, it's time to buy eggs, or it might even just buy them for you, knowing how you consume eggs. Biotechnology is rapid. I was talking to Melissa. She's a doctor, and she told me that you can actually have a gender of your baby predetermined. And as scary as that sounds, that's the reality we're in right now. You can actually, if you want a daughter, they have the technology. So now this is a real thing. Electric cars, driverless cars, 3D printing, health monitoring, car diagnostics, cryptocurrencies, and, other things to be aware of. But if you want to chime in, mention something that might be the next big thing, you're more than welcome to do that now. Anybody here? I'll just keep going. So this week we're gonna use Finbits. It's a screener. Basically, what I like to do first is I select the price. I like the price to be over $20. The really cool thing about it is under technical, you can select to have the 52-week high, and you can have a stock selection 30% under the 52-week high, and basically you're getting a 30% discount on your stocks. So basically, after that, I go by industry. I have 420 stocks returned to me. Basically, this week was kind of rough for the market. We were about the Dow was at 35,000. Now we're at 34.5-ish. So basically, the market took a little hit. So therefore, there's going to be a lot more companies return this week. But industry you want to be in is selected here. So we start with agricultural inputs. You got retail. And I do it this way because there's certain industries I just don't want to be a part of, such as baking. I don't want to be a part of the finance. So therefore, I can just skip ahead and not be part of, any of these. But if you're interested in banks, then they're all listed for you in alphabetical order, finances, etc. I selected 6 companies on my radar from this list. One is Tesla. Tesla, of course, is a pioneer in electric cars. Their current price is $215. They offer no yield. The high price was $305 in September 12th. They beat the market by 4,000% over the last 10 years. And that's primarily the reason I was able to gain 400%, because they've been just dominating the marketplace. A lot of people feel like they're going to impact their lives offering electric cars. The earnings started 2016 at negative 31 cents per share. Now they're at over $4. Their free cash flow is $7.5 million. I own 100 shares at $123. I did a quick evaluation at $222, so that's right about what they're buying, what people are buying in and selling out at. So I was up at 403% after I first bought Tesla during the pandemic. I sold it when I felt it was too high. My thoughts now are, I'm almost -2, double bagger in a relatively short amount of time. It's a non-dividend stock. It is growing. It is becoming a highly competitive market. However, they do have a great brand. So people that buy Tesla keep buying Tesla. College grads say, when I graduate, I like a Tesla. It's become a symbol in today's society. And today, they've been the first for a couple of things. They sell cars right out the mall. That's never been done before. They first to bring electric cars to the market. First, they have futuristic design with self-autonomous driving. I need to do a little more research to decide if I sell or buy, and I'll keep you updated in future episodes, what I'm going to do here. Then, of course, that depends on how the market's going to react and things of that nature. But the summary, Elon Musk owns it, and now that electric cars have entered the market, will Tesla be the market leader? Now, Toyota, Nissan, Chevy, and Ford, they all have their electric car line. Also, Tesla has direct competitors. Rivian, the truck company, and Lucid are its competitors. So the questions on my mind, how does Tesla stay on top of this industry? Well, electric cars dominate this industry that was once gas-driven for basically over 100 years. So those are things to keep an eye out for. My second on the list is Nutrien. This is another company that I currently own. Current price is $61.47. The yield is 3.45. High price was 102 back in August 26 last year. And they beat the market over 60% in the last 5 years. They haven't been around on the market that long. The earnings 2016 were 97 cents. Now they're at over $14 in 2022, and that's why I bought in. That's a strong catalyst to mind if you've been following these seminars. I'm a big fan of earnings. I always watch the earnings and earnings growth year after year, quarter after quarter. That is the lifeblood of these companies. Free cash flow, $5.6 million. I own 40 shares at $82. I did a quick evaluation at 87. I'm going to be buying in. I was probably doing DCA, dollar cost averaging, trying to get, to these lows because I believe in their upside. They're in the crop nutrient field. They help farmers with food production, and they're currently based in Canada. Dollar General is one of the few dollar stores. They're currently at $162.99. Their yield is 1.45. Their high price is $2.50 back in January 5th. They beat the market 200% over the last 10 years. Their earnings was about $4 2016. Now it's $11, so significantly up since 2016. Their free cash flow is $423,000. It's down from $2 million from a few years ago, so that's something to keep note of. Why is their free cash flow going down? Is it like the competition's a little too much, so they're needing to compete? Their quick evaluation is $242. Dollar General has dollar stores. Prices are no longer $1. Now they're $1.25 and up. So the questions they ask is, how many more stores are they going to develop? How many more employees are they going to have? We'll keep track of that in the next couple of weeks. Pfizer is my number 4 company. Pfizer is a drug company. Their current price is $36.66. Their yield, 4.47%. The high price was $51 back in January 3rd. They beat the market. They're actually down from the market 180% over the last 10 years. That's something to keep an eye out on. Their earnings are $1.18 in 2016. Now they're $5.59 in 2022. Free cash flow is $26 million. So they do have a lot of money for R&D, which is always good. They have the money to make bigger dividend payments. They want to keep up with the marketplace. The quick evaluation is 40.53. Pfizer is a drug company best known for Viagra. So the questions are, what new drugs are they going to come out with? $26 billion. There's a lot to invest in R&D, and they do have a strong brand. Viagra was a big hit with a lot of people. Lovesac is a company that you can find in malls. They're located in Phoenix. The current price is $23.84. They offer no yield. The high price is $33 back in August, so about a year ago. They beat the market for over 200% in the last 6 years. Their earnings, $1.48, negative $1.48 back in 2017. Now they're at $1.86 2022. Their free cash flow is negative, so that's something to keep an eye out. Again, if they have free cash flow, that usually have a tail, they have to keep up with competition. If people are shopping for beds, Tempur-Pedic is a big name, Sealy, Beauty Rest, Lazy Boy, the couch market, things like that. So they have competitors around. I wanted to do a quick evaluation of this company. I wouldn't invest in them per se until, the tail on that company becomes a lot brighter. I think they have a lot of work to do to keep competitive. Leggett & Platt, that's the 6th company I found. Leggett & Platt, current price $27.65. They offer yield of 6.45%. The high price was $40.60 back in August 22nd, so basically a year ago. They're down in the market, negative 140% in the last 10 years. Then they really struggled the last 2 years. So if you're interested in this company, we have to find out what happened in the last 2 years to make it that way. The earnings, $215 since 2016. Now they're at $228. So they basically have the same earnings from back then. The free cash flow is down a couple $100,000, but they're still positive at $341. And the quick evaluation I did is $43.75. This company offers steel rod, drawn wires, foam chemicals, additives, inner springs, private label, finished mattresses, wire forms for mattress foundations, adjustable beds, industrial sewing, and quality machines. And then I'll just ask you guys if you wanted me to look at anything else.
Can I just ask
Sure, absolutely.
what's your thoughts on cryptocurrency?
Good question.
What was the question exactly? What about cryptocurrencies?
Yeah, what's your thoughts about? I got a little bit of a cracking a while back. I haven't even looked at it. It was just so little.
Yeah. Yeah, they really,
Where do you think, or where do you think cryptocurrency is heading in your opinion?
that's an interesting question. You know, I always keep my eyes out for it. Actually, back in 2012, I had a strong interest in cryptocurrency. I watched Social Me, the video about Facebook, and the brothers that won big in a lawsuit because they felt they were infringed on by Mark Zuckerberg. I took note of that, and I wanted to see what they were going to invest that money. Obviously, they wanted to do Facebook because they wanted a stronghold, you know, a company with a competitive advantage. So I was wondering what those brothers were up to, and they pretty much started the cryptocurrency. So I went to the bank. You know, I was gonna invest $1,000 at that time back in 2012. And what happened was, you know, the banks didn't know what that was at the time. And the only way for me to acquire cryptocurrency was to actually mine it. So basically, I had to go on my computer, get a high graphic card. That's what it required. And then you actually had to mine them at that time. So basically, I kind of was disappointed about it back then. I always had like a bad feeling about it because, you know, I wanted it and I couldn't buy it just straight up, right? So, and now I feel like why I would buy it, it would be a strong hedge against the dollar, but the only thing there is it's valued in the US dollar. So it doesn't, in my opinion, to me, it's just a market where you have sharks and they're just eating the minnows. And to me, it just seems like a market that, you know, I'm really just not interested in it at all.
Could you explain a little bit about that process? You said you had to mine it. Did that miss stuff then?
No, I mean, that's what it was. You know, I literally went to the bank with like I want to say $1,000, $1,500. At that time, they were like pennies for Bitcoin, and because I got in on it right away. And it was just one of those things where you couldn't buy it. You had to mine it. And that's still the case today. I mean, you can still buy stuff to mine it. As time goes on, it becomes harder to do, you know. So there's just a lot of things about it that I completely don't understand and don't really have the time to understand. You know, I just want to be good at this one thing. To me, stocks made me a lot of money, and I just feel like it's my true passion and something I'm really good at. So, and cryptocurrencies are a whole different animal. So that's just my input on that. But Jake, great question. I appreciate that. Anything else that you guys have?
Like anything else at the top besides that 52-week high low, what would you guess? Or did you pick the technology there, technical? What all did you select at the top?
Yeah, basically I just did two things. I was in technical. I did 30% or below, and you could do more to get less companies. Obviously, if you like select 40, then my 400 sum became now 176. So it went down a lot. So basically, and all the other thing I did was under descriptive. I went under price, and I go over $20. But you can do whatever you want. I mean, you literally can go on here. You can put $5 to $7. You know, if you want to talk.
That again, where's the descriptive?
On the top here. So descriptive, fundamental, and you can do all too. And then all just has everything here, all the different things. So you can pick a stock, $15 to $20, pick out a dividend yield. But I really like this as a discount, from valuation is how I use it. So I try to find like a margin of safety in the stocks that I buy. So basically I find stocks that I like. I do my homework on them, and then I just track them and then get them at the prices that are attracted to me. When that happens a lot, as the market crashes. Other than that, I feel like in a given year, there's always going to be about, 5 to 10 companies that have a good valuation. Does that make sense? Okay. Yeah, other than that, I added to my website. My website is going to continue to be a resource for finding companies on pivots. I use them pretty much every day, but definitely every week. So I'll be putting, stocks I find, and also I have a feature where you can book me one-on-one. So if there's anything in private you wish to discuss or a specific, 401k or different things, I'm available for that now. The Paper Trade Club, we've been doing that for a couple of weeks. Melissa was the grand winner. Unfortunately, she's flying back here, so she's on a part of today's session, but she won with 168.15. So yeah, I'm going to continue this on my website, and I'm up for doing other contests and things like that. I think this is good learning lessons without the risk. So if there's a company you want to invest in, we can do it at no risk at all, and that we can go on, months out and just kind of see how this all plays out, and I'll figure out like dividends, like you're really owning the company. So it's definitely a benefit as we go on from here. And like I said, I would like to do like a monthly giveaway, and then at the end of the year, I'll do $100. So you can keep track week after week, and I give 10 paper shares for joining these sessions. So not only do you get to learn a lot, we could be a part of a bigger thing by following the paper trades. Does that make sense?
So I'm older. I'm already retired, and I did touch my preferred company. But a couple of years ago, I started a Charles Schwab. Just when COVID hit and everything was real low. I thought this was the tax alerts. And so I bought some stuff real low, but then when the market seemed to be crashing again, I just took it all out, which was kind of stupid because of that growing, and spent it because I thought, what the heck, I made some money, so I spent this. But I'm thinking I'm so old, I don't know if it's like worth it like if I invested, let's say, $300 every month for the next 10 years, how do I know how much interest or what would I expect to have at the end of 10 years?
Yeah, really good question. My advice is always to invest in this market. It's just stocks to me are the best investment. You don't have to do a lot of legwork, do homework to figure out what companies you want to invest in for the long term. 10 years, people are around a lot longer. The averages of human life keep going up. The advances on science keep getting better. So basically, it doesn't take a long time. What I acquired, I did in 3 years, and I was just smart about how I did it. If you just have a good strategy and know what you want to buy, those are key. And just like you said, just keep buying in every month and have a plan, and you definitely can accumulate a lot of wealth. And you can do it very fast, especially when you have a plan and you buy more on the dip. So, and we went over great companies like Home Depot, Lowe's, Vassano. There's just a lot of quality companies out there. You just at Apple or what have you. You just have to be in it for the long term to get great returns. Does that make sense?
Keep hearing as if I'm old, right?
Yes.
You want to conserve your wealth. You don't want to take risk, right? So that makes me so hesitant because I feel like, well, if the market does crash like 40%, they say I don't have the years to make that back up. So I guess that's stuck in my head. That's kind of my concern.
It is. I mean, the market will keep doing, it's not predictable at all. The market always likes to do an index of 8% per year as an average return, but a number returns exactly 8%, right? You always have, negative 15 or 10 or 1539, different numbers. But if you just invest in what you feel comfortable with, that would be the best solution for you. You don't have to max out, but you can do something. Even if it's $50 a month or what have you, at least it's something. And then when you get your wins, then you're playing with like the house loony in a way, right? So then you can extend yourself a little more into the marketplace. Does that make sense? So you don't have to go all in, and I definitely would recommend it now. Market's definitely up and things. If you get in, do it at a very snail pace, and then just hold true to the market for a while and buy in the dips, and you'll be fine. I hope that answers your question and concerns.
Yeah, thank you.
You're welcome. But otherwise, that's pretty much it. Half hour. I put some good stuff for you together this week, and we'll keep track in future weeks, just like I did with the discounted stocks. We'll go over that again in next week, and we'll go ahead and just stay in touch and build a community here so we can address these concerns and then learn from the market week after week. Sounds good. Great, guys. Well, thank you for joining, and I'll see you next week.